All right, let's get to it. Um, so today we have we're going to talk about a couple of items. First is last week we did this experimental trade with AMD, and that worked out super well. So first we're going to talk about that, the results of that. And then I made a couple of trades this week on USO, which is the US Oil Fund ETF. And those both of them ended the same way that the trade ended with AMD. So we're going to talk about those because that's real money. Like I put up like real dollars and all that sort of stuff on there. So, okay, so AMD, let's zoom out here a little bit and find this. I'll let you guys know right now. I had some funny things going on with TradingView earlier, so hopefully it cooperates and nothing ridiculous happens. So, okay, so we made this experimental trade last week with AMD. We sold one put at a $200 strike expiring tomorrow, Friday tomorrow, and that ended up going through as a paper trade with a $415 premium, which is $4.15 per share on the option contract, and that comes out to a 2.0% gain for the week. Now, last week when we talked about it, it was going to be $4.10, but when I put the paper trade in, it worked out to $4.15, so we made an extra $5 on that. So if we go through and we look at the rest of the details on this, I'll come back to that in a second. But if we go back and we look at what happened to AMD during the course of the week, here's what we find. So if we step back, this is Wednesday. Let's go to like a 5-day view here. And here's Monday. So Monday rolls around. We wrote this thing on Friday, right? We wrote it down here in this range down somewhere around, this range right about here. It was above 200, so it was like probably right there at that blue line. It was somewhere in this range right here, right? Like up towards the end of the day, something like that. So when this thing got written, then there was a drop down here on Monday when the market opened. So like right off the bat, it was a little bit underwater. And at the time it was kind of like, whoa, maybe I'm, I just made this first experimental trade up on live stream and it's going to just totally be underwater. So wonderful. But then over the course of the day, you can see it rise up. It rose on Tuesday. It rose. It came way up here on Wednesday and it rose. And so when we look at close, when I went and I looked at the option at close on Wednesday up here at like $221, like most of the market was not doing well, and AMD was like on its way up, skyrocketing upwards. So that was not really expected. That wasn't a technical issue. Like there was some sort of macroeconomic thing that was spurring all that, right? So at this point up here is when the paper trade got closed. And so I'm going to go back now and I'm going to look at these details that I wrote down for you guys because I'm so studious here. I bought to close that put on the 25th at $27. So I'm saying I sold the put for 415 and it went up in value so much that it was only worth $27 when I bought it back. So rather than getting, that was the deal, right? I said if the gain goes above like 80%, I think I said 80% or 75, the gain goes above 75% during the course of the week, I'll close the option out. So what happened here was rather than getting this 2.7% gain, we ended up with a 1.94% gain for the week and a total of, 415 minus $27, right? We only lost $27 of our profit. So here's the other piece of this, and then we'll go on to USO, is if you had decided to hold this, like today you notice the stock price, AMD closed at 203.77 and it's up to 205 and change in aftermarket trading, and tomorrow it would expire. So if we had decided to hold on to this thing, then the current price on that's $1.25 a share, and I can pull up the options table here so that we can look at it, and you can see $200, so $200 strike, March 27 expiration. We go over here to the bid and ask spread. Theoretical, right? And is $1.25, and that's what it actually closed at, like what it was trading at when it closed. It's $1.25. So we would be getting very, very close, even if we decided not to sell this thing. And I come back down here to this 1-day view. We can say, well, look at this. 202, actually, I can't really, let's see here. Okay, so 202 is all the way down here. So if we say, okay, if we wanted to hold this for the rest of the week and milk that last $25 out of there, or $27 or whatever it was, we could hope that it closed above 200 tomorrow. And so then that's like your risk level, right? Like you've got to decide like, well, am I okay with like 1.95%, or do I really, really care about that last $27? And in some cases you might, right? Because sometimes you might write an option that, expires in 2 weeks. And if you can get 90% of that gain, you sell the option and it just happens, the stock goes the right direction. Very quickly early on, you might see 95%, 90%, 85% of that gain, with only a short period of having owned the option, selling the option, in which case it makes a lot of sense. Whereas if you're going into the last day and there's still 10% on the table, well, maybe you decide it's worth it to just wait, right? It just kind of depends. So anyway, that was our little experimental trade, and that was, it wasn't particularly exciting in the sense that we had a bunch of legs. Like next time maybe we can write like a strangle or an iron butterfly or something, and there'll be a whole bunch of different option legs that we sell there. But this was kind of fun because I think it gave people like a look at like what actually goes on here, and you're seeing it with actual numbers, right? This $415 premium. Had you never, traded an option before, you're just kind of, skittish about it. So now we'll go to USO, and depending on how long this takes with USO, maybe this will be a shorter live stream today, but unless anyone has any questions or anything. So here's the story with live stream with USO. So I've noticed, as probably everybody has, that oil has been all over the map. It's gone up, it's gone down. It's, it's like the flavor of the day, right? Depending on what kind of news is out there, what the headline is, oil is up or down. And so I made 2 trades on USO this week. The total gain on this was $904, which is about 0.9% gain on the money that was invested, right? Like that's on the money that was invested. So $904 over the course of the week. And you'll see that it's got a similar structure to what we ended up doing where we closed the option out on AMD. So first trade was on March 23rd. I went in, I sold 5 puts, $98 strike, and we're gonna go look at that in just a second here. That's expiring Wednesday. So when you trade U.S. oil and a variety of other commodities in the Magnificent Seven and some of these other stocks and ETFs, they have expirations on every Monday, Wednesday, and Friday. So it's pretty cool, having such short expiration. So $98 strike, expiring on Wednesday, was $424 premium, which actually was, is very similar, right, to what we were looking at with AMD. And so that works out to be 85 cent a share premium. And then so let's go look at that really quick. So if we zoom in to the 1-day view here, and actually, yeah, so this was one of the problems I was having earlier, this circle. I couldn't get it. It was like I created it in this other area of the screen and I couldn't get it to go away. And I just was like, this was 10 minutes ago. I was thinking, oh my God, I'm gonna have this big circle in the middle of my live stream. So, okay, so here is USO. This orange circle right here is where where I sold that first option. And you can see, like, you always hear me talking about the Bollinger Bands and VWAP and like these 2 sigma moves, right? Well, so if you look at this, you can see look at the VWAP first. You can see that there were a couple of areas right here where it went way low. Now, if I had executed this perfectly, it was absolutely perfect. It would have been right on the tip of this little guy right here at 106.47 or whatever, the low 106.47. That would have been a perfect entry. But, there's a zillion things going on. I didn't get it there. I did get it right here. And at this entry, it was the last time during the day that we actually saw it fall below that 2 sigma on the VWAP. And so then if we go look at it on the Bollinger Band, it's a similar proposition right here. Like, it doesn't peak through right at the bottom right there, but you can see where it's like a local minimum, right? It's about as low as it gets in this whole part of the screen, other than way far over on the left. So I caught it right there. And then if we zoom back out a little bit, you can see the next day, it just goes up. It just comes way up. And so that's the thing, is that I said in my head, I looked at some analysis, and if anybody cares about the analysis, we can go through, looking at all these levels, although that wasn't particularly the point of today, but I can. But you see here that I decided on this level. I bought into it because I saw that oil had gotten so low, when in a world where it doesn't make sense that it's even low, right? So I bought in right there. I sold. I say I buy in. I meant I sold the option, but I kind of bought in by, allocating the money, right? And then it rose, and you see this super nice kind of like increase in price right there. And so we just see it go up. And then what I did was, it was the very next day so right here on this day, we're on the 23rd on Monday. On Tuesday, the next day, once it got up here outside of this VWAP, I bought it back. And we'll go look at the price then in a quick second there. And then I did the same thing. It was just so uncanny, right? And I'm not going to suggest that the market is being manipulated on purpose, right, by the people that are super rich out there. But you can certainly imagine a scenario like this that's taking place, where people are buying in, millions of dollars worth of stock and then selling them high, and they know it's going to drop the next day. Like, I don't know if it's happening. I'm not a conspiracy theorist guy, but like, it sure does seem odd that this happens so much in the last couple of years. So anyway, so then the very next day it drops down again, and I was waiting for this entry, and I didn't see this down here, this 107.52 over to the left. I did not see that one because I have other things going on, but I did see these next couple, and I saw it come up, and I thought, man, like, I need to jump on that. And so it was actually, I didn't even jump on it outside of these VWAP bands. I actually jumped on it here. The circle's a little bit off, but it's right at this range, this like 109.02 is where I actually sold the puts for this oil. And then the same thing happened. It went up here. If I was like really risk adverse and I wanted to like really be careful with my money and get out, I could have sold it that same day up here at 114, and it would have been a super nice little profit. It would have been great. But I didn't. I held it. And then look at that. Like, just is, sure as can be, the next day it's all the way back up. Got all the way up to 118.94. And I don't know where it was in this band that I sold it, but it was somewhere up in this range, up in this range right around here, where it was above that VWAP that I turned around. That I turned around and sold that stock. So, hold on 1 second. We got a question. What is it? What are principles that guide your analysis? Maybe the top 3 variables or deciding factors. Okay, so I'll come back to that in just a second, because we're almost done here. So then I bought it back out here, and then if we back up here and we go look at the trades, these are the final details of the trade. So on the first one, I came in, I bought to close, and I lost $25 worth of premium. No big problem there, right? No big deal. On the second trade, I wrote a slightly higher strike. I had a little bit more confidence and in what was going on, and so I got that premium pulled in $534, pulled in an extra $100 and some dollars, and then when I closed, I lost $30 off of that, and so that ended up giving us a 900. If you add up the 424 minus 25 and 534 minus 30, you get 904.56, and you get that 0.9% weekly gain. And so, these are real numbers, right? Like that was real money that was being used. This is five. You could calculate, right? This 5 puts, $100 strike price, right? So at $100 strike price, each contract is $10,000. So that was a $50,000, tie up of money, right? On each of these trades, essentially, to get that. But you actually notice, right, that like I put this in, I calculated that weekly gain on 100K of funds, even though each one of these trades was only 50K. So that's just some interesting details, right? It's exactly the same thing that happened with AMD. And so when we see that, this kind of thing happen, a lot of times I'll hold my contracts to the end, but with the way the market's been, I've been a little skittish myself. And so when I see profit, when I see, 90% profit, I think both of those ended up working out. I can't remember. I posted it in the chat, the Patreon Premier member chat. I posted both of these as they were happening, and I think they were both 94%. So if you put in a trade and, within 24 hours, you're at 94%, just take the money and run. Like that's what Dire Straits says, right? Is that Dire Straits? I can't remember what band that is. Anyway, so that's those trades. Let me look at this question again. And what are the principles? What are the principles that guide your analysis? Maybe top 3. Okay, so here's the thing, and I guess that's kind of what I was mentioning earlier about looking at these. So the big thing that I'm trying to decide here, it's all of the principles are generally technical. Now, I do consider world news because I think that when 20% of the world's oil stops moving around and prices are going up, like that's not a technical detail, but it matters, right? So maybe as the third principle is that I do follow the news. I look at the news. I look at the politics. I look at the reports, the economic reports that come out. And I look at that stuff because it matters, right? Because the goal here is making money. And the goal is to be unbiased and apolitical about all of it and just use it to say, well, how does that affect the market? So that's like the third principle, right? Like the one that I probably put the least amount of confidence in, but it's also super important. But as far as the rest of the details here in terms of technicals, I'm looking at these levels. I want to know what the levels are. And so and I'll talk about that more in just a second here, but when we zoom in fact, let me get a 1-hour candle here. These levels here are mathematically significant. And a lot of people might look at these and be like, oh, that's hogwash, or that's ridiculous. Those are just like lines on the screen. But like, you've got to keep in mind that these levels are based off of some type of mathematical significance, right? So like everybody knows what a linear regression is. Everybody learns what linear regression is in high school, right? And so this line, in fact, I'll get rid of some of this stuff in here so that you can see it a little more clearly, right? This linear regression line right through the middle right here. This is your classic linear regression line, and it is literally just a best fit line through the data. And on the top and the bottom, we have these 2 sigma bands. And actually, I may have linear regression set to 1 sigma right now. Let's see here. No, it's a 2 sigma. Okay, so these are 2 sigma bands. And so when you talk about a 2 sigma standard deviation, you're talking about like a value that is like 96% different from the data set. So that's huge, right? When you're talking about trading, these are like super large swings. And so the psychology of it there. So the first piece are looking at these levels. The first of the 3 items is looking at the levels. And oh yeah, Steve Miller, Take the Money and Run It. Steve Miller Band. Yeah, of course. I feel so terrible. I didn't remember that. So anyway, so yeah, the first piece is the levels, is looking at those levels, and knowing exactly where they are, right? And saying, okay, there's a mathematical significance here, and then stepping back and looking at the psychology of it, because when I activate a 5, 10, 20 day MA and a 50, 100, 200, and then the EMAs, you see all these lines all over the place. Like, there are hundreds of thousands of other traders out there that are trading based on these lines. And they're saying in their head, okay, well, if we pass one of these lines, if we can break through one of those lines, then this stock like broke a resistance level. And this isn't just, it's not just hokey pokey stuff. Like, there's a lot of math and there's a lot of psychology that goes on between that, right? And so then to back up, kind of throw in a third principle there is managing your risk. And so, because nobody's going to know, right? Like, let me shut some of these off so it's a little bit less busy. If I say, okay, we've talked about these levels before, and I'm happy we can talk about them a whole bunch because, like I said, they're super important. But here's the thing. If I'm looking into the future and I'm writing an option and I don't know where this stock is going to go, yeah, sure, I can see the linear regression makes it look like it's going down, but then it's going up in the super near term, and who knows, right? It's all random. What did they call it in Wolf of Wall Street? Fugazi. It's all, who knows, right? And so the fact is that if I'm going to write an option at one of these levels, and I'm saying in my head, I know when I sell that option, if it drops, if it ends the week or whatever, below that level, I have to buy that stock. And so that other piece there is that risk management, is that I have to say, okay, well, if it looks like, when we're analyzing this, it looks like this USO popped up above this level right here, this 115.44, which is the 5-day moving average, and it looks like it's keeping it. It looks like it's going to stay above it. And so if I wanted to take a lot of risk, I could say I'm going to write the put right at this 115.47. And it's a level that the stock may fall through or it may not, right? But now we're going past the math, right? The technical analysis, the levels, that number one, and we're going into number two, which is that risk management, because we're saying, I know there's levels here. I see these levels. That doesn't mean the stock isn't going to fall through them. So how many levels am I willing to risk, right? To get some level of reward, right? And so, if I activate not that one, there was this one here. Yeah, okay, so now we've got more levels inside of here. So what if this thing drops down below that? Like, what happens in this region in the middle here? What does it just fall through? We see it a million times, like things trade from level to level. So it may be that it drops down all the way to this one here. Well, if you're willing to take the risk and you own the stock and you're willing to write your put up here at 115, well, you're going to get a nice healthy premium for it, but you may end up owning the stock. If you want to reduce your risk level, you drop down to this level, right? And you say, I'm not going to go with anything in the middle here. Like, stuff in the middle here is like moderate risk, right? And as we drop down to these levels, we're lowering our risk. And so that's the whole point here, is you take number one, you take the analysis, and to try to kind of like bring this all forward, back to it, because I said a lot of stuff right there. So number one is you do that mathematical analysis. You determine your levels. You determine what the stochastic math, right? The probability says that things should be. And that doesn't mean it's going to be them, because this is still random. And then you kind of multiply that by that second principle, which is the risk management. Like, how much risk am I willing to take? How much do I want that big reward, right? And that's where you choose one of these areas in between a level, or like this level is like, okay, well, if it breaks that level, if USO comes down and breaks this 106.47, I don't want to own the stock. So maybe you write at 106. 106 is like right under it, right? But if it falls through that level significantly, maybe you're like, well, I don't want to write at 94.58 because I can take on more risk than that. But maybe I'll write somewhere in the middle here so that there's some leeway, because we know that things can go through a level and then bounce back up, right? So that's for me, I think. And I've never really like answered this question in a like specific codified way, so it might need a little bit of refinement, but like that's what I would call it. Like the first principle would be getting the math and not even just the math, right? But because the indicators do the math for you, but getting the analysis, like getting that analysis just right with this. And for me, it's the Ichimoku cloud and Bollinger Bands and, you know, a Bayesian classifiers I use and stuff like that. And then the second piece is tempering that with your risk level. And then the third piece is going out and checking the news or checking, you know, earnings reports or checking macroeconomic data or whatever, and using that to confirm, you know, what it is that, you know, that you think is really the thing. So, you know, to give you that final answer. So I don't know, hopefully that you know, answers the question for you, and you know, it feels good. And certainly appreciate the, you know, questions coming in. So but I think that's it for today. Go ahead and take that money and run. And next week I'll tell you guys really quick. Next week is going to be kind of a cool it's going to be kind of a cool different sort of trade lab here. Like I'm trying to keep everything very what's the word, like fresh and like interesting. And so one of the things that I'm going to do is I'm going to go over some of the bad trades that I've had recently. And I think that these are very useful. I think there's probably 3 good ones in the last year that like definitely were a little bit more on the depressing side. And so I'm going to cover some of those. So that should be fun. So anyway, thanks again for watching, and thanks for the questions, and we'll see you guys next week. So take care.